Hi guys, I hope everyone is good today. So let's quickly have a look at the Volatility 75 index. Um, so I have the monthly chart open, and already I can see that we seem to have an information at this region with the neckline being there. However, the neckline is yet to be broken. So we at this stage can't really pay too much attention to this information. Nonetheless, a lot of investors and traders have already sold at this point, and others are just waiting for the neckline to be broken and for it to be retested, and then that's when they will sell again. Um, just to keep going forward, another thing that is very interesting about this particular chart is that we had this candlestick over here, which is a bearish candlestick with a small body and a long lower wick. So this particular candlestick had a lot of liquidity at the bottom where it ends. Hence, we saw the next candlestick, this one, or rather the next candle coming down to that level. It came down to grab the liquidity that was sitting at this level over here, and it seems as if the market is going upwards again. Nonetheless, let's move forward. um, so from here, what I'm going to do actually is move down to the weekly chart. So here we are on the weekly chart. What do we see on this particular chart? The first thing that I see is that we had, or rather we have this candlestick over here, which is a bullish candlestick with a small body and a long upper wick at this point over here. So what that tells us is that we have liquidity at that point and that the market needs to grab that liquidity. Let's move forward. In fact, before we move forward, I'm just going to mark that area so that we don't forget about it. Just bear with me. Let's see. There we go. It's a very important level. So what else do we see on this chart that is interesting or significant? So another thing that is quite interesting is that we had an overextended formation in this region with the neckline being there. The neckline was broken at this point. However, we saw price heading back into the range, making this information at this point in time no longer relevant. So let's see, what else do we see? Another thing that is also very interesting is that at this level we seem to have a very strong support within this region, because we saw price rejecting here at this level, rejecting here, and rejecting there again. So this is a very strong area of support in my humble opinion, and in fact what I'm going to do is actually mark it out. Let's see, just bear with me. There we go. Just make it a bit smaller. Okay, there goes our area of support, and let's move forward. So what else do we see? So over and above us having this overextended information, we also have this um, head and shoulders pattern in this region. Both the head and shoulders pattern and the information seem to share a neckline, which is there. However, as I said, the neckline is yet to be broken. So let's continue. However, let me also mention that this is a strong area of support. I've already mentioned it, but let me just stress it that it's a strong area of support. Let's see. So what else do we see? What else do we have here? So over and above us having that head and shoulders pattern as well as that M formation, we also seem to be having a W formation forming in this region with the neckline there. It is not yet complete. I will take this W structure more seriously when price closes above the neckline. Nonetheless, I also must mention that a lot of traders actually bought at this point, um, because when it comes to W formations, a lot of people buy on the second leg of the W structure, and then again once the neckline has been broken. So over and above that, some traders and investors actually bought because they saw the structure, or rather the support level, where we had price rejecting here, rejecting there, and rejecting again for the third time at that level, which meant in their books they had to buy. So one thing's for sure, guys, and that's that at this level we have a whole lot of stop losses that are here, and that in the future we will see price coming down to that region to grab all of those stop losses. So let's move forward. What else is interesting or significant here? I don't see anything further. So what I'm going to do is head to the daily chart. So here we are on the daily chart. Let's see. So the first thing that I'm going to do on this particular daily structure is add my channel. Just bear with me. So there goes my channel. We just need to ensure that it is accurate. Just bear with me. Okay, there we go. So there goes our daily channel. So what else do we see on this daily channel, or the daily chart? So remember on the weekly chart I spoke about the fact that we have just bear with me. On the weekly chart I mentioned that we have this head and shoulders pattern, right? And I also spoke about an M formation. So over and above that, we can see that price also created another M formation in this region, with the neckline being there. We saw price at this point breaking the neckline, going back to the neckline to retest it. So we would have looked for further selling opportunities at this region, and we saw price actually going down. Over and above that, we saw again price creating an overextended M formation again in this region, with the neckline being there. Price broke the neckline, then went back again to the neckline to retest it. So we would have looked for further selling opportunities at this point. And that is because by now you guys know that when it comes to informations, ideally would love to see price break the neckline, close below it, and then head back to the neckline to retest it, which is where we would look for further selling opportunities. Nonetheless, let's continue. So what else do we see on this particular chart that is interesting? Let me just make it slightly bigger. Another thing that is interesting is that we have a liquidity candlestick here, right? Um, which means that the market has to actually come to this point at some point just to grab that liquidity. In fact, there are two candlesticks that are liquidity candlesticks, and it's those two. And we can see that in this region, price is moving very strongly upwards, and it may be that price is heading towards this level where we have those two candles, which are liquidity candlesticks. So what I'm going to do now is actually just mark those two candles, because they are very much important. Just bear with me, guys. Let's see. Let's see. Just bear with me. There we go. There goes our marker for those two liquidity candlesticks. All right, let's move forward. So what else do we see on this chart that is interesting or significant? So we also had, I must point this one out as well, an overextended M formation in this region, with the neckline being there, right? And price broke the neckline and then went back to it to retest it. So can you guys see that actually at this point we should be looking for possible selling opportunities? We should be looking for possible selling opportunities. So What I'm going to do now is just add a neckline to that M structure. um, let's see, let me just add a neckline, right? So we can see that price actually has surpassed the neckline somewhat, and it, as I said, it may be that price is heading to this region to grab that liquidity. Nonetheless, let me just add the Fibonacci retracement tool just to see if this level actually aligns with any of the key areas that we have on the Fibonacci retracement tool. Just bear with me. Let's see, Fibonacci, there we go. um, there we go. So we can actually see that the neckline of this overextended M structure is in line with the 61.8% Fibonacci retracement zone. And actually, we would have looked for possible selling opportunities at this level. And in fact, a lot of people sold at this level. However, many of them have been taken out already. And that is because we can see that this particular candlestick is pushing to the top and has surpassed the neckline of this M structure. So you would have been taken out had you sold at that point. Nonetheless, let's keep going forward. It may be that, as I said, the next selling point is this level over here once price has actually triggered that liquidity, because as I said, there are two candlesticks here which are liquidity candlesticks, which tells us that there's a whole lot of money that's sitting at this level, right? Other people, or rather other traders and investors, are going to be looking for selling opportunities once oh, excuse me, um, once price actually touches this level. Other people or traders and investors are going to be looking for selling opportunities once price touches this trend line over here, because the anticipation is that there's a first touch at the top, second touch here, and the third touch will be here, personally, I wouldn't be looking for selling opportunities here. I would rather wait and see what happens, because as I said, guys, that it's very much likely that price will come to that level to grab that liquidity. Nonetheless, from here, let's head to the H4 chart. So here we are on the H4 chart. So what do we see on the H4 chart? In fact, before we do anything, I would like to add the H4 channel before we proceed. So let's see, how would I add my H4 channel? Um, let's see. So I'm tempted actually to add my H4 channel in this way, in this manner. However, to be honest, I'm not really a fan of such steep trend lines, and that is because they are often broken easily, you know. And this tells us that the market actually is going to retrace. The market is going to retrace, and we're likely to see price actually closing on the side of the trend line. So I'm just going to delete this channel because it's too steep. It's very steep. It's too steep. I can't really add it. No. So anyway, let's proceed. So we spoke about this area over here on the daily chart, and I said that it's a level of liquidity, and there's a lot of money sitting over here. So that can be confirmed also by the fact that um, we have a very small M formation in this range with the neckline there. Don't confuse it with the previous M formations that I've been speaking about. And when it comes to M formations, what normally happens is people sell at this point and sell again once the neckline has been broken, and they put their stop losses just below, or rather just above that structure. So here as well, I know that there's quite a lot of money sitting here, and that's because number one, we have those candle filling um, candlesticks, and number two, we have this information with all those stop losses sitting here. So this entire move, in my humble opinion, could be a stop loss, sorry, a stop hunt rather, to this area to grab all of that money that's sitting at this level. Anyway, let's continue. So yeah, guys, that's it in as far as I think my analysis is concerned. um, we might see, actually, as I said, price coming to this level to grab all the money that's sitting at this level, and once that is done, we may see it actually coming down again, and we might see price actually coming down to this level over here. And the reason why I say this level is because we actually have another W formation here, and that similar to this information where I said a lot of people have put their stop losses above. We also have a whole lot of a lot of stop losses rather, excuse me, that are sitting just below the W structure over here. So that is it, guys, in as far as my analysis is concerned. If you have any further questions, just let me know. And if you would like me to have a look at any other charts, just let me know. Thanks for watching and peace out.